Hey traders, it's John Fortune here with this week's Weekly Forex Forecast for the 8th of October to the 12th of October 2018. As always, we're going to start by looking at the US dollar index and oil before running through a number of markets, looking at the key levels of support and resistance in the process. And we're also going to be highlighting some of the targets that we're going to be looking for in the coming week and also for the weeks ahead. So let's jump over to the charts and see where the money is this week. As always, starting with the US dollar index. Now we start the week above the key area of broken resistance, looking to turn support at the 95.37. If we can get a pullback, and preferably if we can get a pullback and a retest of broken resistance, turning support, this is going to be a great place to start to look for bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside in the target set, the 96.93. Now, we are still trending to the upside in the US dollar index, and so generally speaking, we are looking at a strong or a bullish US dollar going into next week. And we would generally like to trade pairs next week which are dollar bullish. Next, we have crude oil. Now, we start the week above the key area of broken resistance, looking to turn support at the 73.47. If we can get a pullback, and preferably if we can get a pullback and a retest of broken resistance, turning support, this is going to be a great place to start to look for bullish formations and patterns. And we're going to be looking next week at initiating longs in oil up towards the next key area of resistance to the upside in the target set, the 77.31. And if we can get a break through here, we're going to be looking up towards the next key area of resistance to the upside in target 2 at the 79.43. So the first pair we're going to look at is euro dollar. Now, we start the week below the key area of broken support, looking to turn resistance at the 1.15761. If we can get a pullback, and preferably so we can get better risk to reward, if we can get a pullback and a retest of broken support, turning resistance at the 1.15761, this is going to be the preferable place to start to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key area of support to the downside in the target set at the 1.14460. And if we can get a break through here, we're going to be looking at initiating shorts down towards the next key area of support to the downside in target 2 at the 1.13086. So next pair we're going to look at is pound dollar. Now, we start the week above the key area of broken resistance, looking to turn support at the 1.3056. As we start the week above this key area of broken resistance, looking to turn support, if we can get a pullback, and preferably if we can get a retest of broken resistance, turning support at the 1.3056, this is going to be a place to start to look for bullish formations and patterns. And we're going to be looking at potentially initiating longs up towards the next key area of resistance to the upside in the target set, at the 1.3294. And if we've got to break through here, we're going to be looking up towards the next key area of resistance to the upside in target 2, the 1.3362. Now, one thing to note with the pound dollar is that we actually go into next week with a bullish bias on the dollar, and yet we are structured to the upside in the pound dollar. Now, one of the reasons, or the main reason this is because there is headway being made in the Brexit negotiations, and this is having a positive impact on the pound. So going into next week, one thing to bear in mind is we cannot change the structure of the pound dollar just because we have a strong dollar. It is structured to the upside, but bear in mind, if you are going long the pound, you're going long the pound against a strong dollar in this case, which means that this pair has a heightened risk of either failing or becoming a bit corrective. So personally, I think there are probably going to be better dollar pairs next week to trade than the British pound. And the closer we get as well with any of the pound pairs to the March 29th deadline next year, we're going to be seeing unexpected volatility coming into the markets as well with the pound because of these ongoing Brexit negotiations. So just bear that in mind going into next week. Similar to what we discussed last week with the New Zealand dollar, the same applies here with the pound dollar, with a heightened risk of correcting or failing. So next pair we're going to look at is US dollar Japanese yen. Now, we start the week above the key area of broken resistance, looking to turn support at the 112.848. If we can get a pullback, and preferably if we can get a pullback and a retest of broken resistance, turning support, this is going to be a great place to start to look for bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside in the target set at the 114.73. And if we get a break through here, we're going to be looking up towards the next key area of resistance to the upside and target set at the 115.06. Now, when we get these targets very close to each other like this, if we have the targets which are quite far away, we always have that option of looking for additional positions. We could look for up towards the next key area of resistance like this. But when we have them very close together, we really have to consider these more as a conservative target and an aggressive target, and depending on your risk to reward and your strategy, depending on which one you would prefer. Next we have Aussie dollar. Now last week we were sitting just underneath the 0.72313, and we were saying that this is a great place to start to look for bearish formations and patterns. I do personally have this short from last week just under here. It was a really nice move, and we're expecting further declines in the Aussie dollar as we go into the next week of trading with a stronger dollar. So very simply put, if we can get a pullback in the Aussie dollar, preferably if we can get a pullback and a retest of broken support, turning resistance 0.71974, this would be a great place once again to start to look for bearish formations and patterns. We're going to be looking at initiating shorts once again in the Aussie dollar down towards the next key area of support to the downside and the target set at the 0.69516. And if we can get a break through here, and again, you can see this would have to be treated as a more conservative target and a more aggressive target because there's not going to be really the room to trade in between these levels. But if we can get a break through here, we're going to be looking down towards the next key area of support to the downside and target 2 at the 0.69045. So next pair we're going to look at is the New Zealand dollar. Now, in line with the dollar index being strong going into next week, we are looking for further declines in the New Zealand dollar. We're closely approaching the next key area of support to the downside. So in order to get some good risk reward, what we need is a pullback. If we can preferably get a pullback and a retest of broken support, turning resistance 0.66011, this is going to be the best place to start to look for bearish formations and patterns because it gives us the best risk to reward ratio. And we're going to be looking down towards the next key area of support to the downside and the target set at the 0.64053. And if we can get a break through here, again, we could consider this a bit more of an aggressive target. We're going to be looking down towards the next key area of support to the downside and target 2 at the 0.63487. So next pair we're going to look at is the US dollar Swiss franc. Now we are approaching the second key area of resistance and the second target from last week at 0.9962. So you can see there isn't much room in this area, very similar to what we've just seen in the New Zealand dollar and the Aussie dollar. So what we need is a pullback, and if we can get a pullback, and preferably if we can get a pullback and a retest of broken resistance, turning support at 0.98110. This is going to be a great place to start to look for bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance, the upside and the target set, the 0.9962. And if we can get a break through here, we're going to be looking up towards the next key area of resistance, the upside and target 2, at the 1.0038. So next pair we're going to look at is the US dollar CAD. Now we start the week below the key area of broken support, looking to turn resistance at the 1.29806. So if we can get a pullback and a retest of broken support, turning resistance, this is where we can start to look to consider shorts, looking for potential bearish formations and patterns. And if we get those bearish formations and patterns, we can start to look at initiating shorts down towards the next key area of support to the downside and the target set, the 1.2767. And if we can get a break through here, you can see these again are very close together. We'll be looking down towards the next key area of support to the downside and target 2, the 1.27339. Now, similar to the pound dollar, you can see that the CAD is actually setting up the opposite in terms of dollar strength, because if the US dollar CAD moves to the downside, this is implying that the dollar is weaker than the CAD. So how can we use this information? Well, we can use this information just to simply trade with, because just because we have a strong dollar, if we have a stronger CAD, we can still see the dollar declining against the CAD, because the dollar may be, for example, an 8 out of 10 strong, okay, which would be strong. But if the CAD were a 10 out of 10 strong, then we would see the US dollar being weaker than the CAD, and we could still see decline. So that's one way we can trade them, although the pound dollar to the upside and the US dollar CAD to the downside next week I would consider higher risk. We can also just simply filter these kind of trades. If we see the pound dollar and the US dollar CAD setting up in the opposite direction to dollar strength, we can just take these off the table and we can focus on the pairs, and there's many of them which are actually falling in line with the dollar strength that we've looked at: US dollar yen, US dollar franc, euro dollar, Aussie dollar, New Zealand dollar, etc. So there's plenty of them. So the second way we can use this is just to filter these trades if we so wish. Or the third way is we may decide, if we take say 3 or 4 positions with dollar strength, Okay, we can always use these kind of setups in the pound dollar or the US dollar CAD, maybe just to take one position in the opposite direction if you so wish, just to kind of synthetically hedge out the trades that you have. That's a little bit more advanced for those of you who know that. I'm sure many of you do know how to do that. But if you don't, that's another way we can just use this information when we see currency pairs giving us conflicting messages or conflicting structure to the strength of the dollar, okay, which going into next week is strong. So just bear that in mind with the US dollar CAD and also the pound dollar next week. And finally, we have gold. Now we start the week above the key area of broken resistance, looking to turn support at the 1192.50. If we can get a pullback and we can get a retest of broken resistance, turning support at the 1192.50, this is a place where we can start to look for bullish formations and patterns. And we're going to be looking at potentially initiating longs up towards the next key area of resistance to the upside in the target set at the 1214.00, or if we can get a break through here and a more aggressive target to the upside at the 1217.50. Now, gold is the third pair or the third market that we're looking at this week, which is setting up counter to the dollar strength. So once again, the same applies here, that any longs in gold can be considered, because if we have, for example, a big move up in the dollar index, or conversely in the euro dollar, or say the Aussie dollar and New Zealand dollar, if we're looking for a bigger correction to come in first before further declines, there is always the chance that we get this moving up like this as it corrects and then reversing as the dollar bounces like this. So it is still possible, but in the same way that the pound dollar and the US dollar CAD is going into next week against the dollar strength, gold is also a higher risk trade for anybody looking to the upside. And certainly once we start to break down below the 1192.50, this is where we could see the most explosive move. But we start above the key area of broken resistance, looking to turn support, and so this is the first opportunity we'll be looking for going into next week in gold. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to all of you who do that on a regular basis, and a big thank you to those of you who have subscribed to the channel so far. I want to wish you all a nice weekend. I hope you all have a very profitable week next week. The only thing left to say is take care and don't forget to trade safely.